Peter Eliades with you. This is a YouTube update for the market week ending Friday, January 21st of 2022, being recorded on Saturday, January 22nd, 2022. This is the home page of our website right here. And the reason I'm showing it to you is there's no better time than now to take advantage of our free trial offer for our software, which is usable with TradeStation, our daily video commentary. You can get one or both of those in a free trial. All you do is go to stockmarketcycles.com and go to register. And after you come to register, you'll see these free membership, video commentary, TradeStation app, whatever. So this is the video commentary. 14-day free trial. This is the application, 14-day free trial, and this is the bundle, getting both of them, the application and the daily video commentary, for 14 days free, okay? This free membership is, take a look at it. You're not going to get that much information from it. It allows you to take a look at things that we put on the website from time to time. But these are the three you should be interested in, and especially after what I show you today, I think this is a perfect time to take that free trial. You have nothing to lose, folks, and a lot to gain. Okay, let's get into the market situation right now. I'd like to start out by giving attribution to what turned out, so far at least, to be a brilliant commentary by John Hussman of Hussman Econometrics, okay? Let me show you his website and the particular page I'm referring to. Okay, there's a couple of quotes here I'd like to read you. And by the way, this is at HussmanFunds.com, comments, and it's easy to find. It's free. There's no charge for it. But this turned out to be a brilliant commentary by John, and I want you to be aware of it. Here's what he said. Over the past 4 decades, I've collected scores of interesting syndromes and relationships that tend to occur at market extremes, which I often discuss using terms like overextension, dispersion, and reversal. Occasionally, these are significant enough to prompt an interim update outside of my regular market comments. Pay attention now. Well, on Friday, November 19th, we hit the mother lode. Across 4 decades of work in the financial markets and over a century of historical data, I've never observed as many historical indications of a market peak occurring simultaneously. Noise reduction is always a process of drawing a common signal from multiple, partially correlated sensors, even if each individual sensor might be imperfect. The reason that we follow boatloads of these syndromes is the same reason we base our gauge of market internals on thousands of securities. Uniformity conveys information. And he goes on from there to say his intent is not to call the top of this bubble. And as I've told you so many times, valuation by itself has very little to do with market timing. What John is doing here is not just valuation, although that's an important component. He's talking about some technical indicators that he looks at. And let's go a little further down on this page and see what he has to say. But I want you to remember this. On Friday, November 19th, across 4 decades of work, they've never seen so many signals occur simultaneously. Now let's scroll down a little bit. By the way, this is one of his charts where he talks about and kindly gives attribution to me for talking about the Hindenburg signals that were given and the kind of confirmation criteria that I had written about a long time ago. Anyway, this is the important point right here. The chart below is based on daily data. The red bars are actually presented on a log scale because the tally is beyond anything we have ever observed. The previous record was March 27th of 2000, the day after the tech bubble peaked. Okay, so I want to bring all these things together for you. This is the day. He wrote this special interim update. He usually comments once a month. This was a special interim update because the record of March 27th of 2000 had just been broken on November 19th of 2021. That's the background. Now let me show you a couple of charts. This first chart goes back to March 27th of 2000. She said was the previous record that was just broken on November 19th of this past year. I just wanted to show you what happened from that March 27th record beating, okay? This is the NDX, the Nasdaq 100. Here's the exact closing high. It occurred on March 27th of 2000. This is what happened within the next 14 trading days. Down 31.8% in 14 trading days, under 3 weeks. Ultimately, within 40 trading days, down almost 36%, okay? So you've got that to look at. Now look at this. Okay, this is the date that he talked about in his special update on the Nasdaq 100, okay? That was, so far at least, the all-time high close on the Nasdaq 100, okay? We came up really close to it again on December 27th, but not above this close, okay? So now I wanted to show you, and this is just for comparison purposes. I'm not telling you that this is what's going to happen. I want to show you this interesting move down here. If we get the kind of move that we saw in only 14 days from March 27th of 2000, this is what you'd come down to right now in today's numbers, okay? Right around the 11,300 level, right where this red line is in this, within this gray oval. That's the kind of decline you'd see initially if we get the same kind of decline that we saw in March of 2000. And again, I'm not telling you we're going to see that kind of decline, although I will show you some projections that make it very interesting in terms of looking at these numbers here, okay? So I wanted to give you that background. I wanted to give kudos to John Hussman for what has been a fabulous call so far. And again, he didn't want to make it look or sound like a market call. Here I am calling this top because, no, he made it very clear. He was not necessarily calling for a market top. He was telling people that on this particular day on the Nasdaq 100, it broke all records for not only valuation, but the technical concomitants that go along with valuation that came together on that one particular day. Internal deterioration in the market, a whole bunch of things that he talks about specifically that you can go and look at. Okay, I don't want to make this an advertisement for John Hussman because although he's been brilliant in a lot of the things that he's done, he's probably very much in the same category that I am because he's been classified now as a perma bear. Oh, he's been bearish since God knows when. Just like Eliades been bearish since God knows when. Well, neither one of those statements is true. He has not been bearish since God knows when, and neither have I. I mean, I don't say it very often, but back in the 80s, going into the 90s, when we saw a very, very important market low, and the last time the market was truly undervalued, I was one of the biggest bulls around. Go back and look at some of the material back then, and I think you might be surprised. Enough talk. Let's get down to looking at the projections, okay? Something very important happened on Friday, and that's that we got confirmation of nominal 40-week downside projections on a closing basis on the S&P 500 cash index. Here's where it closed. These are the closes marked in these light blue lines here, and this is where it closed. Breaking below both the offset lines and giving a confirmed nominal 40-week downside projection. Now, the upper side of that projection is not that far away. It's maybe 3% away. 42.6102, but this tells us that if the projection is correct, that's the minimum downside that we look for. But look how big this projection window is, and the lower end of it is 4,003.98. Now, here's what I just did for my subscribers, my paying subscribers in our update that we did for this weekend. We played a little game, and we've done this before. Sometimes it works out, and sometimes it works out differently. But if we come into this projection window, the question is, especially if we come down to the lower end of it, what if we put in the next longer offset? What kind of setup is that? And could we get significantly lower projections? Well, the way to discover that is I put a rectangle, this kind of shaded area here, from the high of the projection down to the low, and then we put in the next longer offset. This is the equivalent of a 39 to 40 week offset. It's 189 to 194 trading days. And look at this. If we get into this projection window, and the projections don't tell us when that might happen, they just give the projection. But if we get into this projection window, especially if we do it quickly within the next week or so, we have an excellent chance of breaking below these even longer offsets. And if we break below these even longer offsets, let me give you an idea what kind of downside projection we can get. Okay, this kind of a measuring tool here. If we go up to the all-time closing high right here and click on it, and then this line that I have my cursor on would represent the halfway point. So if we break below these two offset lines anytime in the next week or two, okay, and we've got a projection, mind you, into this window. If we get in there and break these two offset lines, let's say around here somewhere, that's the halfway point from the high. That would give a downside projection to around 30, 35, 58. Okay. Now, let me emphasize this projection has not been given. Okay. It hasn't been given yet. It might not ever be given. I shouldn't say ever, because ultimately it's going to be given down in that area somewhere. But the question, of course, is it imminent or not? If we get below this area over the next week or two, then we're going to get a projection down to this area, dramatically lower in the S&P 500. Again, let me make it clear. This projection has been given and confirmed. The red area, the red box, okay? 4,003.98 to 4261.02. I believe this upper number is probably 3% lower than Friday's close, okay? That's been confirmed to the downside. If we get into this area, as I just showed you, we could get significantly lower projections. Let's take a look at NDX, the Nasdaq 100. Okay, there's a slightly different picture here now on the NDX, because the NDX on Friday came right into the top, just inside this projection box, okay? Now, that would make you say, oh, okay, so we've satisfied all confirmed downside projections. Well, you've satisfied this on a very minimal basis, but because we look at indexes together, and because the S&P has a confirmed projection at least 3% lower on a closing basis, you have to say that because the NDX tends to be a leader, that if the S&P gets down that extra 3%, the NDX will do that also, if not more, because it's starting to show weakness in relation to the S&P over the past few months. So here's the same game with the Nasdaq 100. Let's trace this box, giving the projection levels, and go to the next longer offset. Here we are. Okay, now the picture's a little bit different here, because if we get below these lines over the next week or so, I'll show you the projection in a minute, but it could be delayed. You could come down here and fool around and then get into the lower side of the window here in February sometime. That would give a very significantly lower number. But let's take a look at some of the numbers. Here's the close, all-time high close, Nasdaq 100, November 19th, the exact day that Hussman pointed to that was setting all kinds of records for valuation in association with internal deterioration in the market. Okay, there it is, November 19th. So if we just break below these lines here and do it in the next, let's say, week or two, then you're talking about a projection down to around the 11,000 level, 11,049. If that's delayed, if we come down, come over here, and then come down and break them in this area right here, you're talking about a move. You can see way down the bottom right here, a move below the 11,000 level into the mid 10,000s. Again, I always have to emphasize there is no such projection outstanding, okay? And there will not be such a projection until or unless we get below these lines for the 39 to 40 week offset. That occurs, then these projections will be given. And if we get below the full continuum, both the lines, it'll be given and confirmed. Now, why does this 10,500 to 11,000 level look interesting? Well, remember this chart I showed you? This would be the equivalent of the same kind of decline we had initially for March 27th of 2000. And that happened in less than 3 weeks. Now, if we measure from the most recent double top almost close in the Nasdaq, we're already about 3 weeks out. So is this going to happen that quickly? Are we going to get down into this area in the next couple of weeks? Stay tuned. Let's find out. We could get a projection down there, and I wanted to show that to you. We do not yet, I emphasize, do not yet have projections down to this area, but I showed you how they could occur. All right, one last thing I'm going to show you is something we showed our subscribers on a very timely basis, and that's Bitcoin. Okay, here's the all-time high in Bitcoin back on November 9th of 21. Okay, right around the same time the Nasdaq 100 topped. This offset is 96.8 to 110.6, the equivalent of a 20-week offset, nominal 40-week projection. And on this day right here, January 10th, we got a confirmed downside projection on Bitcoin to 15,958 rounded off and 27,309 rounded off. Now, as I urge my subscribers, this is not telling you to run out and buy puts or go short on Bitcoin, okay? In fact, we had a little rally right after the projection was generated, so you've got to be careful with something as volatile as this. But I did want to show this to you to give you an idea what the projections were calling for. And as you can see, we've started after that projection was given. The last day or two, we had a pretty big move to the downside. And even as we're doing this recording on Saturday afternoon, down 15% on Bitcoin, okay, on the daily chart. So things could get interesting, folks. But I wanted to show you this downside projection, and I wanted to warn you again. This is not a trading recommendation. It's something to show you. And the Bitcoin projections have been pretty decent. You know, we have a statistical section that shows us the success. And 83% of the upside projections have been successful, and 3 out of 5, not so hot to the downside, 3 out of 5. But a lot of the Bitcoin projections have been a lot more successful than that. So I wanted to show you the statistics and give you this projection on Bitcoin so you could see what's happening there with the price projections. Again, I would urge you to go to our website, free 14-day trial, and are the next 14 days going to be important? You're going to get a free video update every single day if you register on the website for a free update. For those of you that enjoyed this update or have enjoyed our updates, I would appreciate a thumbs up. I'd also appreciate those of you that are looking at us maybe for the first or second time, become subscribers on YouTube. It doesn't cost anything. Just click subscribe. on the YouTube page underneath our video and become subscribers, and you'll be given advance notice, or you'll be given immediate notice every time one of our updates goes on YouTube, and obviously at no charge. So that's it for now. We're facing an exciting market period coming up. Hang around. We'll be there with you, trying to help you out. Thanks for watching.